Off? Oh, I'm on. Fantastic. Enjoy your lunch. Who has special dietary requirements in this room? Anyone? You up the back? It was nice, wasn't it? I like that. They do a very good job. For the rest of you who are in the normal food hall, there was a nice little gluten-free chocolate slice, which was, I actually thought I was in the right place, but I was in the wrong place, but I was grateful for it. Great food here at the Marriott, and they always look after us really, really well, which is one of the reasons that we keep coming back, and we hope you enjoy it. Hello, you're trying to bring down our average age, are you, today?
Just for you.
Just for me, thank you. It's what I like, and you're dressed well too, so we don't mind. You bring up our standard. All right, Tim, we've got a really interesting afternoon. Lots more great investment opportunities for you. Just have a look at your program. There was one that we are going to have to take off because unfortunately flu season has exploded already, and so sadly the wonderful John Praneas from BNG Resources at the last moment is unable to attend. He's actually got pneumonia from his flu, so he's not doing very well at all. So, and he couldn't organise someone else to be here in a short period of time. So we'll make sure you catch up with something. We'll pop it onto our YouTube channel, but that one is not here. So let us get underway because this gentleman here looks like he needs to have a chat with you. So we're going to talk about a project that Queensland has given a really big tick to. In fact, it's given a tick that's so big, that tick has come with $300,000 attached to the end of it. So what on all earth is this company going to do with $300,000? We're talking Renegade Exploration, we're talking copper, we're talking Queensland, and this is Robert Curtin. Robert is the director of the company, and he's going to talk about what's happened. Last time I introduced Robert on stage, we were waiting. He was about to undergo a drilling project that is just about at the end. And if you're a follower of the fortunes of Renegade, you will have, of course, seen one of their recent video news items that they were on it, and there's a fellow there called Edward Fry, and Edward is the exploration manager that works with these guys, and he was so excited and so passionate about what was happening with the drilling. I was like, so it sounds really, really good, but we've got Robert here today. He said if he sent Edward, you'd never get out of the room. So let's welcome Robert, and let's see what it is that's so exciting to invest in. Please make him welcome.
Thank you. Thanks, Chrissy. Actually, I've had to send Ed back up to Cloncurry, so we changed batons. I came back here Monday, Tuesday, and Ed's gone up today to finish off the hole that we're drilling at the moment. I'll talk a little bit about that as much as I can. So Renegade, we have been at this conference now. This is our third year in a row. I moved over to Queensland 2.5 years ago to work specifically on our projects here. Some of it compliments of Mark McGowan and his border controls, but probably mostly because I do like being here, and I'm officially a maroon. So if you're a blue, bad luck. Yeah, come on. I won't make any horrible comments about the blues. So our company, if you're not aware of it, we are totally and specifically focused in the Mount Isa Cloncurry region. We have a range of projects there, some of which we own 100% of, some of which we own 75% of, and also something which is called the Carpentaria joint venture, which is a joint venture with Glencore. It's a very old joint venture, been around a long time, cost us nothing to get involved in it. And in the process, as part of the agreement, we're able to excise permits that they're no longer interested in, and spend money and rebuild the interest that we were left with when we acquired it from the previous owner. Within that, we have what we call our flagship Cloncurry project, and we were drawn to this mainly because of the Mongoose, what we call now the Mongoose deposit, because we've drilled it out to that extent. And all of the copper that we see in that area, just literally around the Cloncurry town site and perhaps about 7 k's west of there. So it's a great place to be. Our slogan is follow the copper. And why not? We've inherited a substantial amount of information from not just our joint venture partner, but others who've been working in that area over many years, and we've been putting that all together probably over the last 2 to 3 years, and we triggered our earn back interest into this particular permit last January, and we've been working consistently on that permit ever since. Little corporate snapshot. Stock price is wrong, which is good because it's actually up. It's actually up a couple of penny or 0.002. We did a capital raise about 6 weeks ago, which underwrote our commitment to drill this particular large hole and other activities that we've got ahead of us. So far the stock's behaved pretty well. We did that issue at 1 and we've traded up at 2, north of 2 and around the current level of about 1.8. There's the board. There's some notables in there, particularly Mark Connolly, who got involved in this company because he thought he would like to do exploration, but I've known Mark a very long time. He's actually a developer and a producer. That's why I brought him on board, because I was convinced that at some point we would need that particular expertise within this company, and hopefully it's not too far away. Mark Wallace is a markets guy. He's been around a long time in the markets, a little bit like myself. There's a mugshot of Ed. Don't be frightened by that look on his face. But I put it in as a bit of fun to have a crack at him. But he's a good man. He's done an extraordinary amount of work. Really good work on our projects, and we're sort of where we are because of him at the moment. So there's the permit that we've farmed into, which is EPM 8588. It's all a bit messy. There's a permit just to the north of it, which is that 28972, and I just want to be really clear on that. We own 100% of it. You'll see how important that is as I move through the slideshow. We are right next door to True North's property, the Great Australian Mine. They're in the process of getting that back into production, and we're hoping we can do something with them, because as you'll see in a moment, we've got contiguous ore bodies, and it makes a lot of sense to put them together. There it is there. So we came up with a resource. We did about 4,000 metres of drilling at Mongoose, and we've come up with that sort of 3 million tonne number. Right next door is Taipan. That's the one they've got. That's 5 million tonnes. Similar numbers. If we put the two together, we actually get a lot more tonnes out of it. And we've been in the I'm kind of laughing here, but we've been in the early stages of trying to do a deal since about last September. But at some point we might get there. So it's always on this slide, discussions in progress. Anyway, we'll move along. But look, they're setting up there. They've got their leach pads up and running. I think they need our ore, and at some point we'll put something together. There's just a little bit of background on what happened at Mongoose when we drilled it. We got some really great hits in there, all very nice. Market reacted well. And that was sort of middle of last year, and then of course the market died for the last 6-8 months, as you know. But in that intervening period, we did a bunch of work. We came up with a resource in December. You can see how mineralised it is, and at the same time we also did a lot of field work. That's Ed and me out in the field, and we sort of discovered another zone, which is half a K long and just a few hundred metres off to the west of where Mongoose deposit actually is. You can see on that slide there's that pit there is called Paddock Lode, Taipan just to the north of it, and then of course Mongoose. So we intend to drill that possibly next month, and that'll be RC program, 1,000 to 2,000 metres. So on to, I think, what has held the market's attention for a little while now, since we announced it probably back last February, and what we got the 300 grand from the government, and we always say thanks, because without that money we don't drill it. So we inherited a lot of information. I'm going to be very clear, all of it public, and then we added our own. So we did magnetic. We've done all the magnetic work on it with our favourite geophysicist. We then added a brand new gravity program to it, which told us that we had this big magnetic anomaly and also the gravity anomaly, and both of them lined up. And the interesting thing about it is that it has a curious yet fantastic parallel to Ernest Henry. So we started drawing analysis between the two. We worked away at it. By way of reference, you can see that Ernest Henry is only about 35 k's northeast, similar structure. There's a lot going on here. There's mines all through there. It's an amazing area. And I guess the question for a lot of people, including some of the guys that worked on this 10, 20 years ago, was where's all the copper coming from, which is on our ground and also true north and elsewhere. So we spent 6 months working on this and came up with this target. Put it to the department. As I said, we got 300,000. It's great. It's possibly a $500,000 to $600,000 hole in total. So that money's critical for what we're trying to do here. There's a nice little picture of the gravity. You can see that those nice little hot spots are coincidental to the magnetic highs that we see as well. So, we were highly encouraged to drill this hole. It's my favourite picture, so anyone that can't think in 3D, but like me, to be honest, you can see that it's not accurate, but what it says is a lot of that structure sits on our 100% owned permit, which is critical for us. If it sat on EPM 8588, we're drilling it for Glencore, and as much as we love our partner, we love it more that this thing's actually sitting over the fence. So. The way the structure works is we see fingers, breccias for want of another word, coming up underneath Great Australia and their deposits, and also up underneath Mongoose, Taipan and Paddock. So there's some very much massive noise in amongst all this thing, and as it says there, we've got this inferred magnetite-rich breccia zone, and the drill is going right now, having a look at it. When we went into this from a cartoon point of view, we're looking at the pathways of it and what it would be, and we've got this sort of those red lines up there. It's like they call it a crackle breccia zone. So before we drilled this hole, we sort of knew what we would be looking for because we've got all the data from Ernest Henry, and also what this thing might actually be as we go down. So. Recently we made a release, because I have to be very careful given we're drilling. We made a release and said that we're seeing what we expected to see. So from that you can draw an inference that we're seeing this crackle breccia zone and all sorts of other interesting stuff. And the statement I'm making here, carefully I might add, is that we've got about 200 metres to go with 100 up our sleeve. We'll probably finish soon. We had some problems with the rig on the weekend. We think our observations are very positive when we compare it to the Ernest style IOCG. And what we intend to do is make a full report to the market once we finish the hole, which possibly might be next week. And we'll talk about our future plans there. There's a rough estimate of our costs, what we're doing, 600 grand for this hole, 300 for other, and then our funding sources. So we're pretty well funded. We feel we're going to end up doing some more holes here, not just the Mongoose West drilling, which is shallower, but we really think we're starting to already get an understanding of what we're dealing with here. It's a very big system. It starts at the top and we're still in it, so it's telling us a lot about what we might need to do in the future to have a really good whack at trying to find a meaningful large deposit. I put in the Tommy Creek slide because we did announce all this. This is part of the CJV. It's graphite, it's rare earths, it's very interesting, it's very sexy. We've had a discussion with Glencore about what we do with it, but of course whenever we sit down and talk to these guys, nothing happens overnight, so we'd like to do a bit more work out there. North Isa is a project that's only just north of George Fisher, and we've got what we think could be a very large zinc play, and we're intending to do an IP program up there, maybe even a bit of gravity. We'll see what happens with that. Our workflow is pretty good. We're going to be very busy for the next 3 months. Clearly the Mongoose Deeps drilling will finish for now, and then we'll do the Mongoose West. We've got other field work to do, and down the bottom, North Isa will be into Tulloch, and then potentially more work at Mongoose Deeps once we get all of our data loaded and in. And by the way, most of it's already in. We deal with it every day, and so we're already working ahead as to where we might drill next there. There's our disclosure page. Everything's out there, I think, and we look forward to coming back and telling the market, hopefully within the next week or two, about this hole that we're drilling and the future for that. Thank you very much.
Honorary. You're an honorary one, are you?
Sorry?
You're an honorary... What team
Queenslander.
is it you've chosen it? Yeah.
Queensland. Yeah, well, I've lived here. I've actually lived here before. I love it here.
Yeah.
I'm fishing over at South Stratty for my R&R starting Friday for 3
Yeah.
days. There you go.
Okay, so you've got a scarf and everything?
It's not that cold.
Yeah. Oh, it was bloody... Did you guys read this morning? It was... Who's been to a place... Is it Tambo? Who's been to Tambo in Queensland?
Tambo, yeah.
Minus 5.6 degrees this morning. All those little fluffy teddies, because Tambo is known for its fluffy teddies, they'll be all frozen in that little room there. Quick, get off the stage now, I'll keep talking.
6 in Perth. Come on.
6 in Perth,
Come
I know,
on.
it was terrible
Steady.
for us in Perth.
Thank you very much.
Thank you
everyone.
very much.
Come and see me at
Go
the
and
booth.
have a chat. I like it. He's quiet but very, very funny, that man. Okay. We're going to stay in Queensland, go to a place, a project called Briggs, and the exploration work that's being undertaken by Alma Metals. Now, I read an article recently and it talked about the fellow that's about to get up here on stage, and it described his boots as being dusty. And I was having a chinwag with him, and from what I can ascertain from what's happening, they wouldn't be dusty, they'd be all scuffed up, because he's got this small issue out there that he keeps kicking copper wherever he goes. And I said, well, that's a big problem, isn't it, to have while the world's facing a copper shortage? So we're going to find out, obviously, more about that. They've got a drill rig that is poised to start drilling tomorrow at the very latest, for the sounds of things. And the idea of that is to quantify how big the opportunity is out there. And there are rumours that it could be doubled or potentially tripled in size. So this is the wonderful Fraser Tabiat. He is the Managing Director of Alma Metals. Would you please make him very welcome?
Thanks, Chrissy, and good afternoon, everybody. That's a nice lead in here to our cautionary note on forward-looking statements about drilling tomorrow. That's the plan, but the plan was to drill today as well, so there you have it. Alma Metals, we are exclusively Australian-focused and focused only on copper. So we've got 2 key projects. The main one I'll talk about is our Briggs joint venture here in Queensland. But if there's time, I will also talk a little bit about the project that we have in Western Australia, which is a much earlier stage, slightly different style of copper opportunity, but one that's nevertheless very exciting. And we're just going through the process there of getting our permits to access that land. So I won't say much more about that. I'll very much focus on Briggs in Queensland. And I guess the key takeaways there right up front. Firstly, it's a joint venture, so we currently own 30% of that project. We're earning to 70 from our joint venture partner, Canterbury Resources. It's very large. There's over 400 million tonnes of mineralisation already identified. That's within an exploration target, which in itself is between 500 and 900 million tonnes at similar grades to what we have here. So it's very, very large. Right at surface, there's over 1 million tonnes of contained copper metal already identified. We believe there's every likelihood that will double or triple in size, and I'll show some slides here as to why we think that's the case. There's certainly upside on both tonnage and on grade, and that's the important thing. And it's extremely well located, very close to infrastructure, only 60 kilometres west of Gladstone. A little bit about a corporate snapshot. Number of shares on issue, about 1.4 billion. We've got a share price around about 1 cent at the moment, so a market cap of a shade under $15 million. Reasonably tightly held. The chairman is the largest shareholder. He owns nearly 7% of the company. The top 20 own about just under 40% of the company. And a very experienced board. The board here, myself and the chairman, have both got porphyry copper experience with large companies. Alistair was with BHP for a number of years. I was with WMC Resources for 16 years. and helped them on their porphyry, their global porphyry exploration for a number of those years. John Dean, who's on our board, most recently been operations manager in one of First Quantum's major operations in Panama. So there's certainly experience on the board of dealing with large projects in large companies. We're also part of a sort of a consulting group in Perth called the Mitchell River Group. Alistair and I are both partners in Mitchell River Group, and MIG provides consulting services, which means we have a large pool of in-house resources, so we don't have to go out to the market to find, for example, resource geologists. We have a resource geo in-house that we share with a number of companies. And one of the companies that we're sharing an office with is Caravel Minerals, which also has a very large low-grade porphyry copper opportunity in Western Australia. They're a little bit more advanced than us, but we can see huge parallels between what we think the Briggs project can deliver and what Caravel already has. So a lot of our thinking on Briggs is derived from the work that Caravel have done. 4 key points for this project. Scale is the first one. As I mentioned before, it's very large, over 1 million tonnes already, and there's certainly significant upside on both tonnage and grade. It's in a fantastic jurisdiction. We're in Queensland. We're only 60 kilometres to the west of Gladstone, so there's a lot of existing infrastructure. That means if we can demonstrate that a mine is worth building here, it'll cost less to build because a lot of that infrastructure is already in place. And that means you're going to have the ability to get low-cost copper onto the market if we go ahead. It's a great time to be developing a copper project. The copper prices are at almost all-time highs. They've just come off a little bit in the last few weeks. If there's time, I'll very briefly talk about our views on the copper price. And as I mentioned before, and no MD would be doing his job if he didn't stand up here and say we're tremendously undervalued. So there's a great opportunity there for leverage in our current share price compared with where we think this opportunity can go. So the first one, let's talk a little bit about the scale. So the image here shows the soil sampling over the Briggs deposit. As I said, Briggs outcrops. So there's outcropping mineralisation over a strike length of almost 2 kilometres and a cross strike for about 1 kilometre. And the soil sampling's proved to be very effective in outlining where mineralisation is. The existing resource is outlined here in those black lines. Our exploration target basically goes out to close to the 500 ppm copper in soils. So you can see we've got that exploration target. If we can ultimately drill that exploration target down to a depth of 500 metres and it comes up with similar grades to what we already have, then you are looking at a tripling in size of this overall resource, from something that's already big to something that would be truly enormous. It's very simple in terms of geology. There are 2 or 3 intrusive centres, so you can see this up here. This is our intrusive rock. This is a porphyritic granodiorite, which hosts a lot of the copper and possibly brought a lot of the copper in. At the bottom right here is the enclosing volcanic sediments. These are also hosting mineralisation, in some places reasonably high grade. And then occasionally we have these unusual magmatic quartz bodies, such as the one here, which tend to be the higher grade parts of the system. We're often seeing grades of in excess of 1% copper where we see these magmatic quartz bodies. They're not volumetrically huge, but they're nice to see, and they're an important sort of marker as to where we're at with respect to the top or the sides of the intrusion. So they're quite useful from a geological perspective. This is going back to that diagram of the soil sampling and really showing where the current drilling program is focused. So late last year we completed a drilling program in this area, which is largely infill of the existing resource. You can see it's in an area where we're getting some higher grades in the soil sampling, and that translated into the drilling. So most of those drill holes intersected grades that were higher than the current average grade of the resource. And so this program, we're going on to the other side of the main body here. So the rig is currently lined up on this pad here. We'll drill 4 holes on that pad. As Chrissy was saying, I was literally dusting off green smudges of copper from my boots last weekend when I was out there helping get the rig on site. Within 50 metres of that pad there is outcropping intrusive rocks going out into the volcanics, and all of the fractures on them are coated with copper oxides. So almost certainly we're going to hit significant runs of mineralisation in this drilling program. Hopefully similar to what we did last year, and the next slide will just be a cross-section through some of that drilling from last year, just to show you the sort of the lengths and types of intersections that we're seeing here. So you can see there's a number of holes that we drilled last year, these two in particular, where we deliberately stopped the hole in mineralisation. I mean, geologists don't usually do that, but we had a very specific goal of just evaluating the top 200 to 300 metres here, something that could go into a starter pit. Both of those holes, the entire length was mineralised at about 0.3% copper, and within that there were several zones that were significantly higher grade, and you can see some of the high grade intersections here, up to 0.5% in places, but a lot of these numbers, in fact all of these numbers, showing zones that are significantly higher than the current average grade of the inferred resource. So just stepping back, so basically the right button. So really the goal of this current program is to drill on these collars here and effectively infill this part of the resource to a line spacing of 80 metres. Now that will allow us to take that part of the resource into the indicated category, and that will support a scoping study which we hope to complete late this year and then publish early next year. And then this is just looking at the whole system in 3D. So what we've done here is we've taken the soil samples, which, because the soil here is so thin, they're effectively pseudo drill holes of a sort of a 0.5 metre depth. We've added in all the other drilling, and then we've just interpolated the copper distribution over the whole system. And you can see there's this very strong annulus of higher grade copper around the intrusive contact, and we see that sort of 50 metres into the intrusion and then going up to 150 to 200 metres outside of the intrusion into those volcanic rocks. We're seeing higher grades of copper in the drilling, and we're seeing higher grades of copper in the soil sampling. So that's what we're following up with this drilling, and the idea is that we can identify significant tonnages of mineralisation at 0.3 to 0.35% copper that may form the basis of a higher grade starter pit, so significantly higher grade than the 0.25% average that we currently see. The drilling program will also provide further information for metallurgical studies. So we have had some early met test work that has shown that with no optimisation, we're able to recover up to 95% of the copper into concentrates that are almost at marketable grade. So the amount of copper recovery will drop to reach those marketable concentrate grades, but we don't expect that to drop too substantially. So all the early signs are that metallurgy is very robust. We think we'll be able to get away with a relatively coarse grind size, which will help reduce the power costs on a project of this scale, and that's quite important. So that's basically infill drilling. If there's time and money, we'll do some extensional drilling on the southern porphyry target. That'll be part of adding to the tonnage. And then all of that goes into a scoping study. We're just about to kick that off. We've just appointed a metallurgical consultant for that, and we're just in the process of appointing our environmental consultants to start on the baselines. And then once we've done the drilling program, we'll appoint a mining consultant and we'll look at the preliminary mine designs. Just a little bit on the infrastructure. I won't dwell on this. Most of the people based here in Queensland will be very well aware that Gladstone's a massive industrial hub. We're immediately north of an infrastructure corridor that's got road, railway, power lines, gas pipelines, and there's plenty of water in the region. Very simple land ownership. We're on freehold cattle farming land. Got a very good relationship with the current landowner. And there's a huge workforce in Gladstone that's skilled and potentially looking for work in a number of years' time. Probably running out a little bit of time, so I won't say too much on the copper market, but the bottom line is pretty much every article you see on copper these days is indicating that copper is one of the most critical minerals if we're going to decarbonise the world. And fundamentally, there isn't enough of it. It's more about the lack of new supply coming on than it is about the demand growth. And most analysts now are predicting copper prices likely to significantly exceed $5 a pound for the long term. And that would certainly make projects of this scale and nature extremely robust. Finally, just a little bit about the East Kimberley Copper Project. As I said, much earlier stage and a different style of project. So here we're looking for sediment-hosted copper, very similar to the Zambian copper belt, so we can potentially see much higher grades here. This is an area that hasn't been explored for over 50 years because access is difficult, but we've got over 350 strike kilometres of prospective stratigraphic horizons. There are two very specific horizons here that do have a number of known copper occurrences along them, and that really well fits the Zambian copper belt model. And we're on an inverted basin margin, so we're very confident that we've got a lookalike here, but at a much earlier stage. So that's something we're very excited about, and we very much looking forward to getting onto the ground there, hopefully this dry season, to do some preliminary evaluations, and then a major program of helicopter-supported stream sediment sampling either later this year or early next year. So finally, just to summarise, Alma, we've got a huge project in Queensland. So we've got scale. We're very convinced that project is going to grow, and that it has the sort of the metrics that we're very confident could become a very profitable mining operation. We've got to demonstrate that through our scoping study, and that's really the goal over the next 6 months, is to do that work. So there'll be continuous news flow around the drilling results, then the metallurgy, and then ultimately the scoping study itself, either late this year or early next year. So thank you very much for your time.
Well done, Fraser. Well done, Fraser. Thank you very, very much for that. Appreciate it. Now, a different story. Oh, there you are. I was looking for you all the way through the room. So glad to find you. So we're going to, if you're looking for a story, perhaps there's a little bit of room for upside, exposure to a fast-growing Western rare earths market, and just for a little bit of extra spice, a high-grade project located near well-established infrastructure at the port of Geraldton in Western Australia. I'm sorry, every time you get up here to talk, you distract me with your shoes, which is not something that I should talk about. I should be talking about a woman of substance and intellect. With those shoes, you wouldn't be out the copper project. This is your one chance to actually clam up in here. This woman is an amazing human being. She holds 2 degrees, 2 separate degrees, and a number of, what have you got? You've got bachelor degrees in strategy, financial management, risk, gemology, metallurgy, and just the yin and yang jewellery production and making as well, just to add that on, as well as another bachelor that she's got. But she's a really focused and driven leadership style that she holds with her team. She's been working for 14 years and so many, now I'm trying to make up for my shoe comment, but she's served as an executive director, advisor to ASX listed companies. She's been involved in capital raising, exploration, development, and also project evaluation. But she's here today in her newly minted capacity as the MD of Venture Minerals. So would you please make her very, very welcome. This is the fantastic Philippa Lagat.
I'd like you to imagine that it's the 3rd of November in 1992. There's a 16-year-old girl, and she's sitting on the veranda of her house in sunny South Africa. In front of her is a beautiful field, a meadow, and there are bees buzzing, insects chirping, and butterflies flitting from flower to flower. She's got a rather confused look on her face because she's just been handed her first holiday job, and it comes with a very strange set of instructions. They sounded like this: 10 kilograms of rough emeralds, raw gemstones, double bagged in cheap plastic packets, just like this. And the set of instructions that she got with those was, take those stones out of the bag, and one by one, you've got to listen to them. The ones that talk to you, they go on the first pile. The ones that whisper, you put on the second pile. And the ones that have nothing to say at all, they go in that field. They go in that field. Now you might wonder, what has that story got to do with the price of rare earths or even the cost of living? Well, my premise to you today, that Jupiter is rising. And I'm going to tell you why. We have 3 very important factors to take into account: significant grade, sizable scale, and a strategic location. Together we're going to use those factors to deliver a major milestone, our maiden resource. So let's start with the location. Where are we? Home, safe, in Australia, particularly Western Australia. And Jupiter is our gem in the crown. Zooming into that, you can see that we've got a lot of infrastructure all the way around us. The project, those little blue licence areas, are a 6-hour drive from Perth and 2.5 hours from the port at Geraldton, along the bitumen highway that runs all the way to Mount Magnet. Now, there are lots of operations in that area already, so we enjoy the benefit of lots of service providers who are in the area and able to support us all the way through to a mining phase. And in addition to that, we have some rare earths plants not too far away. Linus's Mount Weld deposit, and their plant is only a hop, skip and a jump away by West Australian standards at 450 kilometres to the east, and then Iluka's Eneabba plant just to the southwest. So what this tells you is that you can build and operate a mine in this area. Zooming in a bit closer, we're looking at the satellite imagery of the licence areas of the broader Brothers project. That red area in the middle is Jupiter. And what you can see from this terrain is that it's flat, it's sparsely vegetated and minimally stocked with cattle over pastoral leases, right? So we've got year-round access, easy to get to, and we only have to do standard heritage clearance. This is what it looks like. Flat, dry, easy to get around. Let's move on to high grade, right? Significant grade is what we're talking about here. You are looking at an image with all of the drilling that we've done. Each of those dots represents a drill hole. The white dots are where we've drilled holes and the results are sitting with the assay lab, so we're waiting for those to arrive. Everything else we have the answers on. Now, not too long ago, we learned from Margot Robbie and Barbie that hot pink is very cool. The same thing applies to resources. Hot pink means high grade, and that is very cool. Now, Barbie doesn't like to hang out on her own, so she's always surrounded with nice red roses. You'll see more red roses all around our pink dots, more high grade. Now, that's a huge amount of bright colour in the right direction, so we are swimming in a sea of red roses with Barbie, and that's a happy place for us to be. The grade isn't enough on its own. The scale is the thing we really need to get to grips with. That dashed red outline of Jupiter encompasses a 40 square kilometre area. Now, you can hear that that's huge, but it's pretty hard to get the concept of, right? So since we're in Queensland, let's use something you're familiar with, the Gabba. The Gabba fits into the area of Jupiter 780 times. It's really big, right? And that's quite exciting for us. Scale isn't enough. You've got to understand the depth, because we're obviously looking to build a 3D picture of our rare earths mineralization. And you can see across that stretch of the cross-section, which is just a slice through from the side view of those dots that we've been looking at. And you can see that Barbie and her roses are in this picture in every single one of those drill holes. And that is a 7-kilometre stretch of drill results. So quite impressive. So we've got very large scale, we've got very high grade. To contextualise that and what it matters in terms of what we're comparing it with, China has dominated the rare earth space for many, many years now. Their major projects in the south of China have grade of around an average of 800 parts per million of TREO, total rare earth oxides. We're talking about broad widths of high grade of 20 to 30 metres in excess of 2,000 parts per million of TREO. And those are occurring consistently across the deposit. They are situated within broader zones of 60 to 80 metres of over 1,000 ppm of TREO. So we are looking at very large scale across a 40 square kilometre area that is mineralised. So enormous, right? And that's quite exciting for us. Why do we think we can do this? The team, starting with the board. First of all, our chairman, Tim Lindley, joined us in May. He's an investment banker with many years' experience. He headed up Morgan Stanley for a while as the managing director of Australia, and then was the country head for Australia and New Zealand of Barclays Bank. He has spent the majority of his career raising finance for resource projects. Then we have Nick Sinotta. Nick is a mining engineer with a huge amount of experience both in operating building mines and in logistics. He knows how to get things done in Western Australia, and he's done a lot in that Mount Weld area near where the Jupiter project is. He is also sitting on the board of Northern Star and Pilbara Minerals, so he brings a wealth of experience both from his executive and non-executive career to the field. I'm a corporate person. I have spent most of my time turning technical stories into ones that investors can understand in simple English, because it makes a lot more sense to most people, and I really enjoy doing that. In addition to which, I spend a lot of time making sure that all the technical people on our teams work together, because when that happens, you can deliver meaningful results to solve problems, and that means results for investors. These are the gems in our team, and they sparkle beautifully. We have got some of the most competent people I've worked with in this industry, starting with Dr. Stuart Owen, who's a PhD geologist. He is heading up our team for the Jupiter Exploration Project, and he is supported by another PhD, who is Natalie Benici, and her PhD is in geometallurgy, so understanding the mineralization with a higher degree of depth. And then we've got Jamie Bird, who's an experienced Chief Financial Officer and Company Secretary, and we need him to keep us on the straight and narrow and make sure we get it all right. So I'm very happy to have this team of people supporting me. In terms of where we're going, this journey with Jupiter has actually been a very short one, and we're very keen on driving the momentum to deliver value for shareholders at Venture. I joined the board as a non-executive director towards the end of last year. That was followed shortly afterwards with the announcement of the discovery of Jupiter. At the beginning of this year in January, we finished our first round of drilling, which was for the resource program, and we started releasing results. Shareholders liked those numbers when they started coming out, and we started to see the share price appreciate, which is lovely to see, and thank you to all shareholders for that support. In May, we appointed Tim. A week later, we appointed Nick, and the two of them offered me the job to take on the role as the managing director, which was a week later. So we changed out the entire board in a space of 2 weeks. And we are building momentum to move Jupiter forwards and take it on a journey. So what do the next steps look like? All those white dots on the map that need to be coloured in, we're waiting for those assay results. When we have those, that information will complete the picture we have that will help us do the 3D mapping. The technical term for that is the mineral deportment. It effectively means that we will draw a 3D picture of what minerals contain what rare earths and to what extent. When we have that knowledge, we can very clearly design tailor-made metallurgical test work programs that mean we are delivering the results to be successful as opposed to having a guess. And that's a really important thing to do so that you can find economic extraction methods as well as save yourself costs. So really important to do that. Once we have all of that, we will commence the metallurgy. Now, we already have an idea of what those programs will look like, but we're not going to complete those until we get that last assay work back and finish the 3D mapping. All of that information together gets fed into things like wireframes, the bits and pieces of data that we need to create to deliver to our Tier 1 resource consultants who are actually going to calculate the mineral resource estimate. And together, those things will allow us to deliver our major milestone of the maiden resource. So remember that story I told you at the beginning of the young girl on the sunny porch, the sunny veranda in South Africa? That was me. I was on my way to becoming a doctor. And that moment with those talking gemstones changed my life. Jupiter has the potential to change people's lives along the way. The question is, are you coming on that journey with us? And will your life be changed?
Now you've got 2 minutes up your sleeve. Did you want to take a question?
Sure.
Did anyone have a question at all? Would you like to put anything? You have to yell out very loudly.
What sort of rare earths have you got? The heavy sort or the light?
It's a good question. There are a lot of them, right? And depending on who you talk to, that line of what's heavy and what's light does shift. The most important answer that I can give you is that we have 23% of everything that's coming up as magnet rare earths, which includes things like the NdPr, neodymium and praseodymium, and the highest result we've had across the results so far is up to 5,000 parts per million for the combined neodymium and praseodymium results. And then that also includes dysprosium and terbium. So those are the ones that are probably most highly valued and recognised, if that's the easiest way to answer your question. We do have everything mapped out in the back of the announcements if you have the bravery to read those tables.
Thank you very much, Philippa. Would you put your hands together, Philippa, everyone? Great. Oh, what is do I get one? Oh, it's chocolate. I'll take two. Thanks, Tom. Thank you. Didn't realise she was throwing chocolate at you. You need to show more appreciation, people. Goodness me. All right, David Prentice, Brookside Energy. Where are you, sir? Ah, down the front, hiding. Hello. Who likes the word maroon? Who likes to hear the word maroon said? Put your hand up. One. Fabulous. 2, 3, 4. There's a couple of you. The rest of you can get out. No. If you like the word maroon, you'll love the title of this man's fourth well. Flames Maroon Development. Maroons Development Plan.
Go the Maroons.
So we're travelling to the US of A, correct?
To Oklahoma.
Yeah.
Click your heels together and you're on your way to Kansas.
I'll just sit down, Dorothy. You keep going. Would you please make David very welcome, everyone? Let's hear what's on offer in Anadarko Basin.
Well, thank you very much, Chrissy. It's nice to see you again. Welcome, everybody, and thanks for coming along. It's nice to see some people in the room that are still interested in oil and gas and interested in money. We've got lots of both of those things, so I'll quickly take you through this presentation. So we describe ourselves as a nimble, highly successful oil and gas producer. We're built on the tradition of the very successful private exploration and production companies that have operated in the US for many decades, delivering returns to their shareholders. And we're really taking a model that was used by those private companies and applying it to a listed company. So a little bit different to many of the stories that you will have heard today and across the next couple of days. We're highly profitable and well cashed up. And in the middle of a very significant drilling program. We're sort of a poster child for an unloved sector. When you look at some of the numbers that I'll go through in the presentation, you can see the whole sector, including us, are trading on historically low valuations, and that's really a function of liquidity. You know, people have invested very heavily in things like Philippa's story with the rare earths and with lithium or some of these other metals, copper, which are all important for the transition, but we're the guys who are providing the energy for the transition. In 2023, we had net production of 1,400 barrels of oil equivalent, and that's set to grow to 2,300 barrels of oil equivalent in the next few months on the back of our current drilling program. We did a net profit after tax of 16.7 million in 2023. We have a December 31 calendar year, so that's why I'm talking about 2023. And analysts forecast for us to generate a net profit after tax of $28 million in the financial year ending 2025. So you can see it's a very robust business with a lot of cash. Peak production for us as we move forward with this drilling program and then move into full field development is going to reach about 6,300 barrels of oil equivalent a day. We'll average 4,500 barrels of oil equivalent a day in that 2028 year, and obviously fund a big capex program and throw off a lot of cash in the intervening period. We've got a market capitalisation of about 52 million and we have 32.7 million in cash. So you get all of that for an EV of just around about $20 million, which seems crazy, and hopefully we can remedy that through getting out and doing more of these presentations and talking to people about where the value is. So where are we? We're in the Anadarko Basin. I won't spend too much time on this slide. We consider ourselves to be US onshore experts. We have a team of people located in our head office in Tulsa in Oklahoma across all the key disciplines: engineering, geology, operations, finance and land. The Anadarko Basin, I won't spend too much time on it. The Anadarko Basin is one of 7 major basins in the US, probably second to the Permian Basin, which many of you may have heard of. We are in a particular sweet spot within the Anadarko Basin where we've been able to make this discovery replete with infrastructure, pipelines, refining capacity and all the things you need to be able to bring these projects into production. It's very early in terms of the life of the Anadarko Basin, although there's been 100 years of exploration and production activity within the basin. There's still plenty of Tier 1 locations to be drilled and completed and very high quality reserves to be discovered and exploited within the basin. We hold our key acreage position in a play called the Scoop Play, which is in the southern part of the basin. So moving on to our actual project in what we're calling our Swish area of interest, as I said, in the southern part of the Scoop Play. We made this discovery ourselves in 2018. A lot of hard work from the team in the US to identify this area. We started taking leases in 2018, and you fast forward to today, and you can see there's been a bunch of horizontal wells drilled within the area, including 4 of our own reserve definition wells, which were successfully drilled, since we've made that discovery. But importantly to note. That the success of that reserve definition drilling is what's really propelled us on to be able to move ahead with the current drilling program and then move into full field development in 2025. The really interesting thing is that we've had Continental Resources, which is the largest and most successful E&P company in Oklahoma, come in alongside us into this area after we made the discovery, and they've gone ahead and done some full field development, essentially pilot studies in the areas immediately adjacent to our project, and that's really provided the blueprint for how to most effectively go ahead and monetize these reserves. And we were really fortunate that we were able to, sit back and watch those guys deploy that significant amount of capital and look at the returns that they were generating and then be able to use that as a roadmap for moving forward. So discoveries of this quality are rare. We're very fortunate. Some people would go through their entire life working in the oil and gas business and not make a discovery as important as this. It's been a game changer for our company, and we've really only just started in terms of unlocking the value. So in terms of the reserves, this is our net reserves position. So these are net to us, so net to our working interest and post the distribution of royalties. It's about 12 million barrels of oil equivalent. Total proved so the total proved category is about 4.1 million barrels of oil equivalent, up 10% year on year, and that's just a function of drilling. As we drill more wells, we move it from the proved undeveloped into the proved category. But the really important part of this is the product mix. So we produce a 3-stream, so oil, natural gas liquids and dry gas, and it's really that sort of 60% liquids which drives the economics of this business, and as you see the numbers moving forward, you'll see why that's so important. So in the oil and gas patch in the US at the moment, liquids are king. Little bit on the history of how we got to be here. Really, as I said, we made this discovery in 2018. Remarkable achievement for a business our size with a very small team. We've only got 12 full-time employees in Tulsa, and obviously a bunch of contractors and service providers that assist us along the journey. But we made this discovery, took our first leases in 2018. We then walked into some periods of extreme volatility in the oil market. We also had the wonderful coronavirus during that period, and so we weren't really able to move forward with the first drilling until 2021, where we started the commencement of the reserve definition drilling program. And then you fast forward to 2023, we had completed those 4 reserve definition drilling wells, and with the cash and cash flow that generated, we're able to move into full field development in the first of our full field development blocks, being the Flames Maroons development project. And, you know, again, a remarkable achievement. We were able to fund all of that activity out of cash flow generated by these first 4 wells. So when you have a look at the first 4 wells, they're absolutely stunning performance from these reserve definition wells, both in terms of initial flow rates and sustained production. And that's really, as I said, what's underpinned our ability to move forward with this current drilling program and then move forward in 2025 into full field development. Importantly, we're able to get these wells down and drilled, cased and cemented and into production without any safety incidents, on time and on budget, which is a wonderful achievement for a team to be able to do that in what is sometimes a very technical and challenging sort of environment. And importantly, on this slide again, to look at the resilience of the reserves here. So if we did a look back on our Ranges well, which is probably our sort of middle of the road performer in terms of its performance over its life. If we did a look back on what that would have achieved if at a $45 oil price and a $2.50 gas price, it would still generate a 10% rate of return at those much lower prices. And that's really, I guess, a natural hedge for us. We went into this project when we made this discovery saying it's got to clear that investment hurdle for us to move forward, and it becomes, protection for us against lower commodity prices in the future. So fantastic wells, and as I say, been an absolute game changer for the business, and what's been able to propel us into this next phase. A little bit on the low cost, high margin production stream. Again, this is critical to these cash flows and critical to the success of the business. If you have a look at that map, you can see a bunch of dots and a whole lot of lines. That's pipeline infrastructure for gas takeaway capacity, gas processing facilities, and in green you can see the oil refineries. So you can see there's a couple of oil refineries within 20 miles of where we're currently drilling, and numerous gas processing facilities. So basically all of that translates into lower operating costs. So we have very little produced water. We have no nasties in our production stream. It's a very clean, high quality crude oil that we produce, and it comes with those natural gas liquids. And so all of that translates into these fantastically low operating costs. So less than $10, about $9 US per barrel of oil equivalent operating costs. So you can see at today's prices, this business throws off a lot of cash. So what did the first 4 wells do? It's been an unbelievable transformation. We went from no production to averaging 1,500 barrels of oil equivalent in 2023. These first 4 wells have already thrown off $60 million US in revenue, and it's only 2 or 3 years into their 25, 30-year productive life. So they're fantastic wells. We've seen an enormous increase in revenue and in net income, and all of this has really funded, in whole or in part, our ability to continue and move forward with our next drilling program. It also funded, obviously, all of the cost of running the business, and also funded a 5% share buyback that we undertook last year. So moving on to the current drilling program, this will double our well count. We're drilling 4 wells. This is taking the Continental Resources blueprint that I talked about earlier and applying that to our own acreage. So we're drilling 4 wells at once in one of our drilling spacing units. The drilling is underway now. Expect some news out this week on how that's going, but it's going particularly well. This is what's called pad development. So we move a rig in, we skid the rig from well to well. We'll drill all these wells at once, and then we'll bring all these wells online at once. So if you think about it, it took us from 2021 to 2023 to drill our first 4 wells, and in the next few months we'll double our well count, and you'll see a dramatic increase in our production over the next few months. Drilling's on, as I said, drilling's on schedule, and we're set to sort of finish the drilling part of that project in the next few days. The results from this program will double our production, provide a significant boost to our cash flow and revenue, and really propel us to being one of the top tier oil and gas producers on the ASX. Just really quickly on the economics here. Again, this is just about the FMD project. So this is just the 4 wells that we're working on now, and really just showing you some sensitivities around what happens at different oil prices. It's a $26 million CapEx program, again funded out of our cash and cash flow, so not coming back to the market to raise any capital. And flow back is set to happen in the next month or so. It'll produce about 700,000 odd barrels of oil equivalent in its first 12 months, and 2 million odd barrels of oil equivalent over the life of these 4 wells. So a fantastic project in and of itself, but it's a doubling of our scale in a matter of months between now and the end of this year. So in terms of what does that mean for the next few years, obviously what comes after the FMDP, so propelling us straight from the FMDP into full field development of the rest of those 11 or 12 million odd barrels of oil equivalent in reserves. And you can see, peak production over that period of about 6,300 barrels of oil equivalent, 4,500 barrels of oil equivalent averaging for the year of 2028. 110 million in revenue in 2028 and 54 million in net income. So, huge numbers and a fantastic ramp up of activity over that next sort of 4 or 5 year period. So the next slide is really kind of what I call the holy grail for E&P companies. So this is what production looks like for us over the next few years. So you can see in the dark blue at the bottom, that's the production contribution from our reserve definition wells, so the first 4 wells. In orange, you can see the production contribution from the wells that we're currently drilling, and then in green, you can see what full field development looks like. All of that funded out of cash flow. So we will spend beyond what we're currently spending. We'll spend another 126 million between now and the middle of 2028 on drilling out those next 16 odd wells, but we'll finish 2028 with about 45 million in cash and no more capex to spend, and then the business throws off another 200 million in the next 4 or 5 years. That makes that sort of what I call the holy grail, which we then have a business that's generating $1.5 million odd US dollars a month in net income. We have a big cash balance to be able to do further capital distributions to shareholders and or buybacks. But we also have a massive growth engine that we can then rely on. I'm running out of time, Chrissy, am I? That's all right. I've nearly finished.
No.
So
Go, 10 seconds.
there's the punchline. So 50 mil market cap, 20 million EV. The metrics are ridiculous. Please come by the booth, and I'm happy to take questions. Thank you.
Right on. Bravo, I like it. That's it. All right. This next fellow here was actually that quick off the stage this time last year. Tom McCall, if you were here. Remember, he was going to a certain State of Origin match and he had the car waiting outside to get into where he needed to go. Thankfully, this year it's actually been, is it next week? Is it next Friday?
Next Wednesday.
Next week. So he's able to spend time with you and discuss his wonderful gas project and talk to you about Comet Ridge. Would you please make him very welcome?
Thanks, Christy. So, good afternoon, everyone. I'm conscious I'm the last prezzo before afternoon tea. Only got a dozen slides. Don't want to stand in front of anyone with a cake. So we'll go very quickly, just quickly race through the dozen. There's 3 of us here from Comet. Down the back corner hiding is Sean Scott, one of my non-execs, and Phil Hicks, our CFO. So grab any one of the 3 of us if you'd like to talk gas. The stuff you're seeing today and tomorrow is the mineral stuff. The mining needs lots and lots of natural gas. We need gas for everything. It's here for a long time, and I'll run you through some of that. We have the best yet to be connected gas on the East Coast, and I'll throw some maps up and take you through it as we go through these 12 slides. Normal disclaimer. In terms of where we sit, the lime green, that's central Queensland if you like. Brisbane's just off the map, the Gold Coast just to the southeast. The lime green blocks are the gas production from the big and small operators, Arrow, QGC, Shell, APLNG, Origin, Conoco, Santos. There's a bit of Cenex. There's a few other little guys in there. That's where about 4,000 cubic feet a day of gas comes from. In the winter time, some of it goes west and then south to the southern states. A lot of it goes to Gladstone and gets exported, and it keeps the lights on the east coast. The New South Wales and Victoria are really dependent on our natural gas, and the only reason they have lights on now is because we export a lot of natural gas south. Comet Ridge's position is up in the north, Mahalo Hub. We have other gas blocks off the map further to the northwest near Longreach in the Galilee Basin. Not enough time to talk about them today, but happy to talk about them outside if you'd like to. So I'll just run you through where we are on Mahalo. But it's a very large gas development. Some of this gas will go to LNG potentially. Most of this gas will go into the domestic market. And things like glass, bricks, fertiliser, plasterboard, if there's a housing crisis on, none of that can be built without a big pile of natural gas to build the things to make those bricks and glass and plasterboard and all the other things that are needed. Just one slide on the federal government intervention. From a personal point of view, December 2022, probably one of the silliest things I've seen a government do is try and regulate a gas market. It caused a consternation with a lot of companies. That uncertainty ran from December 2022 all the way through till the middle, really the third quarter of last year. That's all been unwound now. The small producers or potential producers like Comet Ridge are exempt as long as we meet a few conditions. One of those is that we supply to domestic market. One of those is that we're under 100 petajoules a year. So we're really back to normal, and the irony is the $12 cap is really now, that the government said has really now become the $12 floor. So I haven't really heard of anything in the gas market being signed up at lower than what the cap the government's set, and I think there's an unintended consequences example for you. So probably one of the more interesting comments is the bottom right-hand comment on that slide, and that is the federal government 18 months ago went from being very indifferent to natural gas to, if you look at the statement the federal government released about 6 weeks ago, they're convinced now we'll need natural gas right through to 2050 and beyond. So there is no renewables industry without natural gas, and there's 6,000 products that are made every day from natural gas. So we're here for a long time. This is a really important slide. The box on the left, the table on the left, is our reserves and resources, and it itemises the blocks by number 1 to 5. The map on the right shows those blocks. We've published this to the ASX about half an hour ago, so you can get online and download this presentation with these maps. We've had a new block win, I'll tell you about that. That was only released on Monday. But basically the grey area in the southern part is a joint venture we have with Santos, and the orange areas in the northern part are 100% acreage to Comet Ridge that we've won through competitive tender process over the last few years. That total area is very large. It sits just inland of Gladstone. There's pipeline infrastructure for small volumes just 14 kilometres to the west of us. There's a big LNG pipeline and a domestic gas pipeline 75 or 80 k's to the south. So we've got the right address in terms of gas development, and the way we're looking at this at the moment is a big gas development with Santos in the grey, and our own 100% gas development in the orange from the northern blocks, and they may flow through together. We may actually get an early start and get some of our own gas off to the west ahead of that. So we'll talk through a little bit about that through these next slides. This one really is for the analysts. I wouldn't worry about reading all of that. You can read that at your leisure at home if you like, but the blue side is the Santos joint venture side. Comet Ridge has 57%. Santos is the operator. Of all the big LNG schemes, they have the reputation as the low-cost operator. We're pleased to be on board with them. And it's almost a 50-50 joint venture. The way that works is that each of us pay our share of costs, and then each of us markets our own share of gas. So as we go forward into production, Comet Ridge will be selling our 57% of gas. The gross reserves are 266 petajoules of 2P, which is large, and that's fully approved, been through all the environmental processes. Coal seam gas and coal in Australia needs federal and state environmental approvals, so we've done that. On the orange side is the 100% side. That's the part Comet Ridge operates, and we'll be looking to tie that in initially through the small diameter line to the west, and then bring the rest of it down through the main development with Santos. That's in the approvals process for the environmental approvals right now. We expect our first state government approval back on the 9th of July. So we're working through those processes. They all take longer than they should, and there's a lot of hoops to jump through, but we push our way through and fight our way through, and we get there. Just a geological map we took from our subsurface GM. This just gives you a sense across the main part of the field of the level of data we've got. There's been coal exploration wells drilled up there since the 50s and 60s. You can see on the western side, the left side, there's lots and lots of seismic. This is an area that's very, very heavily appraised. So we've got an enormous amount of data in which to develop the field and plan our field development. The coals through the area coalesce at times. Sometimes we get packages of coal that are 7 metres thick, and we put a horizontal or a lateral well through them. Other places the coal split, and we might be targeting a horizontal well in 1.5 or 2 metres thickness of coal. And these days the lengths of those laterals are increasing with the technology. So it's quite common now to drill wells that are 1,500 or 1,800 metres long. And we note Santos are doing some south of us in Arcadia up to about the 4,000 metre mark, so that all improves the economics. This is really an interesting slide. The map on the right is what we call our high quality fairway map. The green U shape or the horseshoe shape is where our coals are the most high quality for development. They are the most high quality there because they're shallow. They're no deeper than about 350 metres. So the mining analogy would be that's the really high ore concentration part. As we go way up to the northeast or to the south, the coals get deeper. The wells there, when they're drilled in there, will not produce quite as high a peak rate, but as we make them longer, they'll be strongly economic. So that's where we're focused on, that development horseshoe shape or U shape. In the box there, we've got 3 successful pilot schemes in that area that have all produced gas, and the table simply says as we make the wells longer, we get more gas flow rate. So we started with a small well, a little baby well is only 360 metres, and we ended up with a well that's nearly 1,900 metres in coal. One of the good things about the coal seams we have is they're almost 100% methane. We get a very, very small trace of nitrogen and carbon dioxide, and that makes offsetting that environmentally very easy when you're only dealing with a trace of CO2. This is really the summary of the Mahalo gas project with Santos. We put the Santos blue colour on it. We've simplified the JV structure a couple of years ago by buying Origin APLNG share. We did that with a loan from Santos. That's been paid back. We now have a 2-party JV. We've got a really extensively appraised and approved project, and we're progressing our infrastructure solutions. We're working with Gemina and Santos now for Gemina to build our export pipeline. We take that capital off our balance sheet and we pay for that pipeline through an operating tariff, which makes a lot of sense to us. This is one of our 100% blocks. It's our northwest block. We called it Mahalo North. Had we known we were going to win more blocks later on the eastern side, we probably should have called it Mahalo Northwest. But we've now divided that block into 2 pieces. Our first development application in the lower orange part went into the state government in October. The northern part went into the state government in April. Just a couple of months ago. We're working through the development pathway on that, and the key step in that is to get our environmental approvals, and the longest lead piece of that is EPBC approval in Canberra. So we started that in October. We had initially hoped to get that done in 2Q. Our latest forecast for that is it's 4Q, and potentially, depending on how the bureaucracy works, it could even go a little bit beyond that. But we're working through those approval processes right now. For the Queensland Government, there's a slide there just to talk a little bit about some fortune we've had in the last few months. On the left side, we've won a $5 million funding grant to go and drill another pilot scheme in Mahalo East. And right in the middle of that map on the left, there's a little red line, which is our 1,500 metre lateral well plan. So we're planning to drill a vertical well, which initially we get coal properties and we run downhole logs and we get a lot of information out of. We take core, we move the rig about 400 metres away, and then we drill another well which turns the corner. It gets horizontal in the seam, it hits the vertical well, and then it runs 14 or 1,500 or 1,800 metres out the back side of the well. Our pump goes in the vertical well and that's what we produce. And so our horizontal or lateral well is just a conduit to bring water and gas into the vertical well. We've done that before. We're now going up to the northeast side in September, October to do that again. On the right-hand side there's a green sliver. On Monday, just a few days ago, we announced that we've won an additional block with Queensland Government. That's our 4th block win up in that area, and that we've called that Mahalo Far East Extension. It'll extend that Mahalo Far East block slightly to the west. So that gives us more development well spacing to put development wells in the future. So altogether, that area between the joint venture with Santos and our 100% blocks adds up to about 1,850 square kilometres. Our equity position is high. We're looking to build a 10-inch pipeline with Gemina that would give us capacity out of that area of about 85 or 90 terajoules a day, which is about 85 or 90 million cubic feet a day. So this will ultimately be a very big project. The southern half operated by Santos, even though we'll be selling 57% of that gas. The northern part will be operated by us and we'll be selling our own gas. So we expect 3 or 4 or 5 buyers for this gas. And in December, we've signed up and finalised our first gas sales contract with CleanCo, which is a Queensland Government power generating company. They do a lot of renewables and they need our gas to feed in at night when the solar panels aren't working and the wind farm's not working to keep the lights on. So we're in the process now of talking to a number of other big gas users and signing further gas sales contracts for both the Mahalo JV gas, our share of it, and also the gas to the north. As we sort of come towards the end, the pipeline connection's a critical path for us. I mentioned Gemina before. They're the second biggest pipeline owner on the east coast of Australia behind APA. They're the logical partner for us to build our pipeline because the new pipeline will connect into their own infrastructure, and from their own Queensland gas pipeline called QGP, we can supply molecules into Gladstone, we can supply molecules backhauled into Wallumbilla. So they're a great partner to have with us. They will use their balance sheet, it will be their pipeline that they own, but we will pay a tariff to use that pipeline to get our molecules to market. So it works very well for us as well. And we're working with Santos now. We're behind where we wanted to be on our front-end engineering design start, but we're very close now to pushing all this through both a pipeline feed, or front-end engineering design, and then an upstream feed. In terms of just finishing up, the key messages are gas is here for a long time. Don't believe some of the stuff you would have seen in the paper 2 years ago that gas is over. The paper today will even tell you that gas is around for 2050, so even they've got it right now. Gas is here for a long time. We need it for everything. East Coast is strained. Victoria and New South Wales are under risk of the lights going out, and we may even see some of that this winter. If not, it'll be the next one or the one after. We've got a great big gas hub close to Gladstone, and we've got a data room open for funding. We're talking to people about prepay for gas sales, about equity in our project, so we fund ourselves going forward. And then the last slide, just to finish, is our corporate overview. We've been trading 20 cents lately. We're worth about 220 million on the market. We have a little bit of debt at 9.5 million and about 20 million in the bank at the end of this quarter. So that's it for me. Happy to take questions outside there, either myself or Phil or Sean, and happy to talk through Comet Ridge and natural gas. Thanks.
And so, because you've got time now, you have the luxury of time to speak to everyone, which is lovely. Thanks, Tor, for that. All right, team, we're going to have a break for afternoon tea, and when we come back, we have 5 more opportunities for you to have a look at, and then I'd love to invite you all, if you have the time and you're not rushing off anywhere, back to Melbourne or wherever it is you might be going, to stay and have a few drinks with us and avoid some of that peak hour traffic this afternoon. Thanks, everyone.